The Australian dollar moved over 170 pips against the Kiwi dollar between Monday and Wednesday this week. In this video, we'll share the reason for why the Australian dollar strengthened so much against the Kiwi dollar. Hi guys, it's Arun here from Forex Source, where we help you to understand and trade the currency markets better. So why exactly did the Australian dollar strengthen so much against the Kiwi dollar this week? Well, the Reserve Bank of Australia had their most recent monetary policy meeting on Tuesday. Our team highlighted the importance of this event for the Australian dollar in our recent week ahead video. Now, for those of you that don't know, monetary policy meetings are an essential tool for professional forex traders, as central banks use these events to determine whether to adjust interest rates. And as you know, interest rates are some of the biggest drivers of currency values. So what happened on Tuesday at the RBA meeting to cause this initial spike in the Aussie-New Zealand currency pair? Well, the Reserve Bank of Australia decided to leave rates unchanged. But why would an unchanged interest rate cause this event in the markets, you may ask? Well, the reason for this is expectations. Everything in the currency markets revolves around expectations. You see, in the build-up to this event, the markets were very undecided as to whether the RBA would cut interest rates or leave them unchanged. According to a Reuters poll, there was about a 60% probability for the RBA to keep rates unchanged and a 40% probability for them to cut rates. So with largely divided expectations, the stage was set for a big move in the Australian dollar, with a bullish move expected if the RBA were to leave rates unchanged and a bearish move expected if the RBA were to cut interest rates. So what happened was that the RBA actually left rates unchanged, but they also came out slightly less dovish than the markets were expecting. Now, even though the RBA lowered their growth and inflation forecast, they emphasized their confidence in their own labor market. And as a result, the Aussie dollar strengthened across the board, especially against the Kiwi dollar. And we can see that reaction from the Aussie-New Zealand currency pair with this first bullish jump we can see on the chart. Now, on Wednesday, the Aussie-New Zealand pair had another big bullish jump of over 100 pips. And the catalyst for this event was the AUDNZD, or Reserve Bank of New Zealand's monetary policy meeting. Yes, they also had one this week. And just like with the RBA's meeting, the market's expectations about the AUDNZD's meeting were very mixed. There was about a 53% probability for a rate cut and another 46% probability for a no change. Thus, with the markets undecided once again, we expected a lot of volatility from this event. So what happened on Wednesday with the AUDNZD's meeting? Well, the AUDNZD decided to cut interest rates in order to help support employment and boost inflation, and they also lowered their OCR forecast for the rest of 2019 and 2020 as well. And as a result, guys, the Kiwi dollar weakened across the board. We can see this reaction on the Aussie-New Zealand pair with the second bullish jump we can see on the charts. So where to from here with the Aussie-New Zealand pair? Well guys, at the time of this recording, you can see that the AUDNZD has paid the majority of the bullish move which resulted from that RBNZ rate cut. But despite this, our analysts still see some upward potential for this pair for the following reasons. Firstly, after the RBNZ's rate cut, there is now no longer any difference between the Australian dollar and New Zealand dollar interest rates. Secondly guys, the RBNZ has lowered their forecast for their OCR rate by September 2020, which means that there might be another rate cut on the horizon. Now compare that to the RBA, which has expressed confidence in the labor market and has said that they will only lower interest rates as long as unemployment starts to trend lower. However guys, it's important to note that with the RBNZ's rate cut, the bias for the Kiwi dollar has moved more to a neutral stance from a dovish stance, which means we'll need to pay careful attention to any incoming data from New Zealand, as that can affect the fundamental bias for the currency. So guys, how can we look to trade the Aussie-New Zealand pair? Well, for now, our analysts are looking for buying opportunities with any significant pullbacks in the currency pair. Now, if we draw in our fib from the daily swing low to the swing high, we can see that the pair has some nice confluence with the 38.2 fib, as well as this recent support and resistance level, as well as the 105.50 level. So a move back into this level could provide a good buying opportunity on the pair, with a good probability stop loss anchored in this area below these recent swings, and a possible target close to the 110 handle if we use the 100% level on our fib extension. So guys, there you have some actionable and tradable insights on the Aussie-New Zealand currency pair following this week's important monetary policy meeting minutes. If you found this information helpful, you can visit our Forex Source website by clicking on the link in the description below. Until next time guys, cheers.